Good morning. It is February the 5th, 2018. Time to kick off another trading week. Hope everybody's weekend was better than expected. It was a cold one here. Went walking yesterday with the dogs. This afternoon it was 18 degrees with the wind blowing 25, gust to 35. So that was brisk. So it is still winter on the southern central plains. We need to get some moisture though out of this. We're just getting all the cold weather, so the wheat crop is suffering. We'll kick it off with our disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have overcompensated for the impact of any of certain market factors, such as a lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Well, we're in an interesting situation. Historically, there has been an inverse relationship between the equity market and treasuries, and that's what's taking us up right now. Stocks are headed lower. Treasuries are headed higher. We also it's an auction week, and we'll have the 3-year tomorrow, and the market has been heavily sold into the auction, so we should start to see some support today. The inverse relationship is what's in question. If stocks are selling because of the sharp increase in interest rates with the potential for more, then they should be moving lockstep, and we saw that last week that we could have selling in both markets. So can't put a lot of faith in the inverse relationship. It'll be a factor, but it's not something. Oh, the Emini's down, we're buying treasuries, which we've been able to do up until this past week on most days. So we come off the low. Weakness in the Emini has taken us up here. We've got this pretty strong break in the market, say 121 even, 121.04, and we're pointed higher right now, so we might have a chance to get off a trade at 3 to 7. I started off this morning wanting to sell 31s to 03s, but let's move it up to 3 to 7, and we'll put a question mark at 31. And then 11 to 15. On the buy side, pretty clean break here at 28. Last rotate down stopped at 26. The breakout in London was at 26 also. And so this 23 area to 26 is probably pretty good support. So we'll make a buy 23 to 27. Buy 1, and then 17 to 21 buy 2. We have news today in Europe. The PMI service numbers were generally higher than forecast. We have PMI services at 53.3, and ISM services will be the focus at 56.2. And they could influence the trading. I think the big dynamic that we deal with this week will be the auctions. For all of those, one of the things that people used to talk about until it no longer worked was that if the AFL won the Super Bowl, the stock market would be down for that year, and if the NFL won, it would be up. Well, the NFL won last night, but I always thought it was a perfect example that correlation does not represent cause. But some people trade on things less substantial than that idea. 145. That's kind of a round number, so we'll make 45, 45.04, 1. Sell 7 to 11, 15 to 19. On the buy side, 25 right here, so we'll make 20, 24, number 1. 13 to 17, buy 1. 1 to 5, buy 2. I did not get to see the Super Bowl, but from the score, it looked like it was a pretty darn good game. I, like 80% of the rest of America, kind of rooting for the Eagles just because they hadn't won it before. I mean, Brady and those guys have been up there so many times, and not to take anything away from what they did, but it looked like it was contested down to the wire. The final whistle. Okay, gold, we've got this break right here at 41, 42, right up in here. So then we've got the spill from 46. We're up. So we'll make 40, 42, sell 1. 44, 46, sell 2. On the buy side, 34, 36, buy 1. 29 to 31, buy 2. Draghi speaks to Parliament, the European Union's Parliament today, and certainly can change what's happening in the euro and change it quickly. Draghi can move the market 1 to 3 points when he speaks, so something to be cognizant or aware of. I know, generally speaking, not on a day-to-day basis, that they would like the euro lower so they can export outside of the European Union. It looks like the current deals that the UK had in place before Brexit will be honored and kept by the EU, and they've been pressured by their automobile manufacturers that they can't go screwing with tariffs and punish the UK for that. So the whole focus or point behind a lot of stuff Draghi's has done has been to lower their currency, and we'll see if he's able to do that with Parliament today. So based on what he's going to say to the Parliament, if you had to make a trade on the euro, it'd be from the short side before he turns on the mic. Okay, here we are at 24.73. Top of value is 95. We've got the mode at 80, so a limit sell against 80 structurally is an okay trade. So 80 to 85 would be where you'd have your structural trades. The idea that we're going to trade lower. 95 to 05 would be sell 1, picks up the overnight. And again, we've got the danger of whatever the hell Draghi's going to say today. My guess is he's going to try to talk the euro lower, but like I said, he can move the markets a point. 24.50 to 60 is where support is. Buy 1. 24.25, buy 2. Yeah, you guys get those little hot spikes of weather up there. My daughter lives in Denver, and I'm always amazed at how warm it can be when we're getting a blow out of the north. Okay, crude oil got sold last week, probably on quiet days. We've had forecasts for as high as $80 before the buying is over because of reinflation is the argument that they're using. We've had the IMF raise their price for 2018 up to $58 per barrel. So I believe it was the IMF. So it's everybody's pretty comfortable with crude oil, at least staying above $50. So is the top of the market 70 to 80? If you had to make a guess, maybe 75 on the top side, maybe 55 on the bottom side as we trade right now, and the central price in there would be 65. So we've had sellers above 66. We've had pretty good buying below 64. Crude normally trades in a $2 to $3 range. So a 64 minus, 66 plus, and that puts us at 65. So we don't have a big advantage trading in here from the 65 side from a position trading standpoint. Okay, this rotate up stopped at 23. That rotate stopped up at 41, so we'll make, because we have a B right here, we'll make it 65, 65 and a quarter, sell 1, 65.50, 75, sell 2. All right, trading range is expanding on this, so there are some days it's pretty easy to get a buck on this. On the buy side, 64.50, 64.75, buy 1. That's where support is. Then 64 even, 64 and a quarter, buy 2. I don't have a strong feeling one way or the other. The price of crude oil is just, I don't see a compelling reason to be long or short here. So right now we're dealing with a B, and that tells us that we should look for a place to sell it, to retest the 64.50 to 60 area. And last but not least, the Emini. What's it going to do today? Let's go back and take a look at the F1 screen. We've got a low volume number at 37. We've got a high volume number at 27. The low volume number is 17. So 37, 27, 17. They're all 10 points apart. This little ledge right here at 37 could be support. 27.35 is a 5% correction. I forget which house it was that made a projection of 26.86. That would be a little over 7% correction. 10% correction takes us to right below 2,600. I think it's 25.91. The market, no doubt, got ahead of itself. I mean, everybody was just talking about, God, can we be up 15 days in a row? We saw that our option play was worked. I mean, I think we went through 3 strike prices in like a week. So we knew the market was ahead of itself, and corrections in there. So bear market, by definition, is a 20% correction. 5 to 10% corrections are there all the time. And tops usually don't get put in without a retest of that top unless we have a major piece of news that no one can miss. And that retest usually takes 30 to 45 days. So we'd be looking for a retest of the high of 28.79 in March or April, given normal circumstances. So that's where we find ourselves right now. So 37 is potential support, and on our F2 screen you can see that we have a low volume number at 35.25. We're at 43 right now. I'm guessing there's pretty good resistance at 50 to 55, and definitely 30 to 35, and it may be as high as, say, 37, say 32 to 37. So the first trade getting short would be 49 to 51, then 54, 56 for sell 2. On the buy side, 35, 37, buy 1. And then let them go down. 27 would be the next place that we would stop. And the low volume number is at 28. So we'll make 29 to 31, let them get stops below 30 for buy 2. PMI services 53.3. ISM services 56.2. That's the one that they'll look at. And that one could come in higher than forecast. Economy's been pretty good. That's it for right now. It's going to take me a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.